Perfect. Well, once again, I want to welcome everybody to our Lunch and Learn here, where we're going to be basically going over the fundamentals of Forex, and that's going to be basically going over support and resistance and how the market structure moves. And then that'll allow you to identify different trends that goes on as well. And then eventually you'll be able to get into an opportunity where you can get precise entry points, as we like to call them, sniper entry points. So with that being said, I'm gonna start sharing my screen first and do a quick overview of what we did yesterday, and then we'll kind of see how it plays out in the market with a few charts as well. If everybody can see my screen here, I'm gonna start off with the how the market moves. Okay, the market moves in three different directions. One being a bullish, meaning uptrend. And then so what we do when the market is bullish, we try to look for opportunities where we buy low and ride it all the way up. And I'm gonna show you other opportunities in the market to where how that looks on the live screens, as well as opportunities for a sell. So bullish, like I said, is going to be considered an opportunity where we're looking for buys only. You can trade against the trend, but it's not likely it's going to be a good opportunity for you where you can capitalize fully. So to keep it simple, to keep it basic, we want to try to buy whenever the market is in the uptrend, and that's what we try to do, buy low. As far as bearish, basically a downtrend here. And you'll see that's considered bearish equal downtrend. And we're looking for opportunities where we sell at a high price and watch the price drop down. The other opportunity, the way the market moves, is in consolidation. So in consolidation, basically we want to wait for the market to move out of a zone, out of an area. And you can see here that in this situation, the market moves, but it wasn't that much. So that's like a sideways trend. So it's three different trends you can have: the bullish, the bearish, and then the sideways trend here. So that's one visual that you'll have that I'm gonna post in the chat for everybody before we leave. The next thing you want to kind of do is look at your support and resistance. Now, support and resistance, you'll hear that a lot when you see in the live sessions and things of that nature. So basically, we see at the bottom we have support. We at the top we have resistance. And anytime you can put this as an example. So anytime you're bouncing a basketball off the floor, you're looking for it to bounce up. And in this situation here, if we bounce price off of this support, we're looking for it to rise up. In the opposite of that, basically resistance, we're looking at the ceiling. So anytime the prices are high, we're looking for it to drop. So we throw a basketball to the ceiling. I'm pretty sure 9 times out of 10, or 10 times out of 10, with gravity as well, it's going to hit that ceiling and bounce all the way back down. So support is most likely is going to be opportunities where prices in the past have touched maybe 3 or 4 times, and that's going to be considered resistance. Support is when price in the history have touched at least 2 or 3 times as well, and you can kind of get an you can be able to identify how the market moves and how it actually opportunities for buys and sells in this situation. Because like I said, if the market is at a high price, we're looking for it to go in a downtrend, and we buy, we sell high. And like I said, if we're looking for the market at the bottom, we're looking for it to rise up, and we catch it on a buy and rise all the way up. Okay, so support and resistance is something that you'll hear a lot more of. And the thing I want to show everyone today is more about the market structure. You can still see my screen. Right now, I have a chart up, and basically it's just market structure. Okay, so we have this situation here. It's called higher highs and higher lows that's being created. Anytime you see that in the market, this is an uptrend. I'm gonna show you indicators later on the live screen to where you're able to see this in the market and kind of identify it, and it gives you an extra cheat code basically. So in the uptrend, we have a higher high, we have a higher low that's being created. From there, you have another opportunity where it's a higher high and a higher low, and a higher low and then a higher high, excuse me. So in an opportunity where you're looking for situations where you want to buy in the market, if it already reached that higher high and you had that indication on your using that your trading view options, you know it's going to create a higher low. And then this would be a perfect point to where you're able to get in on a buy and continue riding it all the way back up for another higher high. If you have patience or if you want to take profit once it actually hit this higher high, that can be one option. If you have a little bit more patience or know that it's going to hit this top level, let's say, you can let it hit that higher low and continue on the uptrend. So I'm gonna put in right here uptrend, and then I'm also gonna put bullish. So this is one way that the market moves is going to be in that uptrend, like I said, and a bullish uptrend where it creates higher highs, higher lows, and work its way all the way back up. All right, so moving forward, what's the opposite of bullish is going to be a downtrend, or another case where the market is creating lower lows and higher lows. So we're starting up at the top, which is resistance. We'll create a lower low, a lower high, another lower low, another lower high, and then work its way back down as well. So in this situation here, we have a simpler another way. This is the way the market moves as far as downtrend goes. So downtrend, another word for that is bearish. So let me write this so you can get a visual of it. All right, so we have two different ways right now. So we have the downtrend where the market creates lower lows here. We have the uptrend bullish where the market creates higher highs. All right. So the third type of way that the market moves is actually called consolidation. So this is sideways trend. And so you hear that a lot basically. Depending on the area of the zone, you can actually, make money within this area, but if it's in a let's say a 15-minute time frame, you'll be able to see that the market is not moving too much up or down, and it's going to be considered sideways trend or consolidation. So let me type that in for everybody. All right. So again, like I said, three different ways that the market is going to always move. It's going to either move in a bullish uptrend, a bearish downtrend, or it can be in a consolidation phase. So remember that, okay? All right, that's that. So now what we're gonna do is I'm gonna back up a little bit and show everyone how we actually identify charts and things of that nature. So simply we have a free website where you can actually create a profile and look at different pairs in the market. You can see that you have the indexes here, you have the currencies here, you have oil, you have crypto and metals. So this is how you look at, anything in the market that you want to look at. And once you're able to identify how the market moves, you can capitalize in the stocks, you can capitalize in the metals, cryptos, and all of that, because it's going to be the same thing basically. All right, so this is where we actually look at different pairs. So if you want to type in a pair, let's say the US dollar versus the Japanese yen, we say it's the USD JPY. I'm gonna click on that and it's gonna actually take me to a pair. I'm gonna remove all my drawings real quick and remove any indicator that I have. All right, so now, right now, what you see is these are called candlestick patterns here. And being that we're on a day time frame, you can see that each of these candlesticks represent one full day. What you'll see as well is that if they have a wick on it, as far as this little part that's sticking out here, that means price actually went up there, but when the actual day closed, um, the price stopped here. Or when it opened, for example, if price opened down here and it came all the way down, but it closed here. So prices can actually move here and then come all the way back to this price and go back the other way. So basically, that's what the wicks are for. We'll get into more candlestick patterns in the future, but for right now, in the daytime frame, each of these candles represents one day. And from here, you can see there's different time frames that you can look at a chart on. So anytime that we're identifying trends, especially for a situation to where we're doing the day trading, Well, we're only trying to get maybe, let's say, 10 to 15 pips or so. You can look on a 4 hour time frame. And what we call that is top down analysis. So just real quick, on what we're focusing on today is the market structure. What we see here is an example of a bullish trend. And just to give you a quick example of that, I'm gonna do this for everyone real quick. Where's my stuff at? All right, here we go. All right, so basically we started here. We're gonna start low here. I'm gonna mark this up as far as our higher highs here, and then a higher low, higher high situation, higher low. Uh, I'm gonna do it all over again. And the more you play with this trading view, the more you'll be able to master these little gadgets. Honestly, this is something that I take a lot of practice with for myself. So um, yeah,
So Joe, this is what we supposed to be having is the trader view,
yes, yes, yes,
trading view. I mean, okay.
yes, yes. And like I said, tradingview.com, this is going to allow you to practice marking up your own charts because it doesn't hurt anything to, practice. And like I don't know if you got on late, no problem. But what I want to do is show everybody the basics, and then from there you'll get to a point to where I want to be able to share your screen with everyone, and mark up your own charts, and we can do it live because I don't think anyone has this in the market right now as far as like live training. So this is what we have as far as this uptrend. So this uptrend, like I said, we call it a bullish move. I'm sorry,
Okay.
where it creates higher highs, higher lows, higher highs, higher lows. And honestly, this is my first time doing the visual of it myself without even putting my indicators on it. So I'm gonna see how well I matched up with it by simply, if you remember the call from yesterday, to where we got our different indicators. You click on the FX tab, and from here, if you'll see right now that I have the higher high, lower low strategy. If you don't have that indicator, you can simply go higher, higher high, and then basically you're gonna have different options to choose from. This higher high, lower low strategy is the one that I use. So I'm gonna slap it on there and see how well I did. So I'm putting myself on the spot, and let's see here. Bam. So basically, it gives you that other confirmation that you're in the upwards trend. Because if I go back to wherever she went, wherever it went, basically the uptrend, like I said, is going to be considered where you create higher highs, higher highs, higher low, and so on and so forth. And of course, you can see I was off a little bit. Um, but you see the picture, you see how the market moves. This is, like I said, this is going to be considered an uptrend. And what we're looking to do in the uptrend or bearish or bullish trend is actually buy low. So say for example, we got into the market. I'm gonna show everyone this since we're doing it. We got into the market here, and I can take out my ruler real quick. We saw price change where price is actually reversing and going from the downtrend to the uptrend. Let's say we got in on a buy right here. What you'll see that there was a with the Japanese yen, so 178 pips on the uptrend. All right, so this is a situation where you can get in at a low price because we want to buy low and sell high, and you can write it out for this higher high. If you have enough patience, you can continue the uptrend here. And if it's creating higher highs, like I said, you don't want to buy when it's at a higher high. You want to wait for it to have a slight pullback where it creates the higher low, and then you can buy again. So that's an option for you as far as like, um, when to get in for an entry point, basically. So uptrend, we want to buy, looking for buys only. Let me see if I can find a nice downtrend in the market for us. Let me slap this off first. Remove, let me scan. And basically all I'm doing right now is going back in history. So you'll be able to go back as far as you need to go, just so you can have the opportunity to where you can find, practice. So it's a whole bunch of different pairs out there to where you can practice. Okay. So I'm gonna use this area right here, because it's a nice bearish downtrend. Okay. So I'm gonna put myself on the spot again. I don't mind. Um, let's see here. Let me close this out. All right, so we start at the top here, going down, creates a lower low, lower high. Let's see. Let's see how well I did. All right, so again, we're looking for opportunities where we're only selling, okay? Being that we're in a nice downtrend, okay? So we sell high, we sell when the prices are high, and we buy when the prices are low. So in order for me to check my work, check if I see if I done this right or correctly, I simply go to my different indicators, my higher high, lower low strategy, and see how I done. Honestly, practice. Honestly, this is my first time doing it live and naked, honestly, as far as like charts. So this is my first time, but I've been able to identify it enough to where I'm actually getting to a point where I can not have to use these indicators. And the same will come for everyone as well. So we see downward trend, we're looking for sell opportunities. We're seeing that it's creating a lower low here, another lower low, followed by a lower high, lower low, lower high. I skipped one, but yeah, here we go. And then another lower high, then another lower low. Um, so basically, that's what we're looking for as far as the market goes when it's in a downtrend. Now, the third way the market moves, like I said, is in the nice and consolidated sideways trend. Let me see if I can scan the market and find that for us.
Joe,
Yes.
excuse me, I don't want to throw nobody else, but before we move to the sideways trend, can you go back to that bearish trend we was just seeing
Mm-hmm.
and open it up a little wider? Because I right there at that top red candle at the high at the go up the first one.
This one?
Right, that low high, the very top low high, the very first one.
Uh-huh.
Not that one, this one. So to enter in that, how will we enter it? That'll be 105.88. We'll say like we were gonna enter for a sale. There will be our interest point.
Correct. So I don't want to get too much on the opportunities where
Okay, I'm getting ahead. Okay.
yeah, but that's a good question. But yes, just like in a buy situation, we want to buy when it's at a reach after it hits the higher low. In this situation, we want to wait till it reach a lower high and to continue that next lower low opportunity for us. So in this situation, I do a quick break down and see. So we caught at the top of the trend and we rolled it all the way down. And basically that's we on the JPY, 197 pips, okay, on the downwards move. And so that's the importance of being able to identify trends. Identifying how the market moves is going to be key to getting the fundamentals down, okay? So that's the bearish trend. That was we did the bearish trend and we did and now we're looking for, let me see, 4-hour time frame. If not, we're gonna make it into let me see here, I'm gonna find something a little bit better. We're gonna use this area because it's definitely in a situation to where it's in a consolidated sideways trend, we'll say. If I just put this here, but if I don't even want to put that here, I'm gonna put, I don't know where my tab bar went. All right, so everybody can kind of get the picture, okay? We're just focusing on this area here. It's not in a major downtrend, it's not in a major uptrend. So prices are moving back and forth through this zone here, we'll call it. we'll consider this a sideways trend or consolidation. And so basically, let me even go a little bit further out here. So basically, what we want to do is be patient. If we see something like this in the market, especially on a smaller time frame, but just for visual purposes only, you'll see that this is considered, we'll say, moving sideways, and then we have a nice break. So what we want to do is be patient in this situation, which I dropped that first review chart to everyone to get the visual of. But this is a situation in the markets to where we want to actually be patient. If, like I said, if we're on a 30-minute time frame or something, because it's not going to be much movement going on. So this is how you identify the sideways trend. And I'm gonna just put the higher highs and the higher low strategy on it and see what happens. And so you see pretty much that it's creating a lower low and a lower high, and it's going back and forth, back and forth. And what you also see is that it's staying between this price and then this price here. So that's another indicator that prices really haven't been moving much. So so now let me do a quick review of everything. We had a nice here, we had a nice bearish trend where we're looking for sales and the opportunities at the high point of the trend, working its way back down. Um, that's bearish. Going back to the beginning. And I believe it was here, it might have been somewhere here. But in this situation where we're creating the higher highs and the higher lows, okay? So the nice bullish uptrend. So let me find it here. All right, so just again, I'm gonna put this in the chat so everybody can take this home and have a visual for you to keep with you. So quick review, bullish uptrend, looking for buy opportunities. Bearish downtrend, we're looking for sell opportunities. Consolidation, wait for the market to break price, okay? Um, support resistance, bottom is support, top is resistance, okay? And like I said, this opportunity where we want to try to have our support resistance marked up to where we can know that if prices hit a resistance, it's 9 times out of 10 is either going to drop back down. But if you have a upwards trend, it can possibly break and keep retesting and going on the upwards trend, okay? Let me see what else I want to show us or have. All right, and then this one, this is a quick overview as well. We see that the higher highs are being created. We know we're in a bullish trend. And we see lower lows are being created. We know that we're in a down bearish trend, okay? Sideways trend, we're in consolidation periods, okay? So we want to wait till the market declares and break from there. All right, so what I'm going to do before we get out this card, I'm actually capture this and put it in the chat for everyone. So this is going to be a good visual for you to take home with you. And Rick, I just saw your question. I want this to be interactive, so you can unmute yourself. But I see your question. The question is, what is the best time to trade on? Best time frame to trade in? Honestly, it depends on what your pip goal is. If you're looking to get 50 to 60 pips, it might take a couple of hours. So what you would possibly want to do is use the daytime frame. The daytime frame. Reason being is going to have a lot of much more movement. With that being said, you want to possibly have enough in your risk in your account, in your trading account, to where you can withstand any type of pullbacks of that nature. So if this is a day time frame, basically, it might pull back for 200 pips, but you gaining another 400 or 500 pips. So time frame is basically depending on the amount of your pip goal. If that answers your question.
So I have a question if nobody else. I don't want to take up somebody else's question, so I could ask this later, but if nobody's going to say anything, I have a question.
Okay, what you got?
I don't want to confuse anybody, so I'm just putting this disclaimer out there. It's just for my understanding. So higher highs and higher lows, we want to buy at the higher low and then sell at the lower high. Is that what it is? And then is it a way of thinking the higher highs and lower lows? Is that kind of like a retest in the middle of support and resistance? I know a retest will be when it touches support or resistance, but is it similar logically to kind of a retest?
Correct.
Okay.
So that's why it's all kind of important to have your support and resistance marked up. And the reason being because let's say, great question, by the way. Let's just say that this was our resistance, okay?
Mhm.
But we did see that it created a higher high. And then what ended up happening is, let's say it went to a higher low. Yes, we're in an upwards trend, so you can possibly, and this goes to buy here. Just know that, for example, price is going to test, depend, like I said, depend on your support and resistance. If you had this marked up and this is a resistance line, you'll have to make sure you know that, okay, price is probably going to be tested in this zone or this price. And so I need to be patient enough to where it breaks and pass and retest again and continue on the uptrend. So you kind of, that's why it's important to know your support and resistance, know the zones that you're in, to get in on that perfect, buy and sell opportunity. So again, yeah, you would want to buy once it's right here, and just have the mental toughness to know that it's a possibility that you can get, stop, prices might stop and reverse and go the opposite way.
Mhm.
Same with the higher lows. If we create or the lower highs, if we know we just created a lower high, we know it's a great opportunity to go in for a sell, and ride it all the way back down. But we also do know that if it has the opportunity where we had a lower low created here, that is going to go back up to this resistance, we'll say, and possibly stop right here and go and work its way back up or back down. So it's good to know your support and resistance, because this would be an opportunity where it all goes together, works together for you.
Joe, to piggyback what she was saying when you said right here, we was getting in on a buy at the higher low. And
Hmm.
then we were riding all the way up to that higher high. And then is that where, say like then it's going back down. Once it hit the higher high, we would get out the trade and then come back and get back in for a sale right here at the lower low.
At the higher low.
No, okay, we were right here, the first higher low that you have circled, that
Hmm.
one right. We would get in at a buy, and how far we can ride it all the way up to the second higher high or to the first higher high.
You can write it up to this one right here. But like I said, it all
Okay,
depends. Let me mute whoever's in the back. Or mute yourself again so I can make sure everybody can hear.
okay, I can hear. I'm on mute.
Okay. So yeah, so it's really gonna be dependent on the support and resistance and everything of that nature. So and depending on what your PIP goal is. So honestly, let's just say, for example, this was uh let's say this is 95 pips. If you should be kind of satisfied with those 95 pips, that'd be a great entry point and a great profit for the day, depending on your lot sizes, of course. Um, but again, it could possibly have that opportunity where, even though it was on an uptrend, it could possibly reach prices to where it's respected enough to where prices reverse and go the opposite way. So again, like I said, that's why it's important to have your support and resistance marked up. And I won't get into anything about trailing stop losses and things like of that nature on this call, but just the identification of trends, and what you'll see in the market as far as how that goes. Um, so with that being said, I appreciate the questions. I hope everybody learned something from it. I think I posted let me see. I'm gonna post this in the chat. I don't know if I did already. Let me find the chat.
So as right now, since we are beginners, or at least I can speak for myself, I'm a beginner. The most of the pips I should take is about right now is 10 pips.
Yeah, I mean, if you want to practice, honestly, take them in your demo. Take it and see. Yeah, start
Okay,
identifying trends. Let me stop so I can find the chat. Oh, there we go. I don't know if I got this one. I posted it again in the chat. Copy. So I'm posting these charts or whatever in. So basically, you go back and have a visual of what these how the way the market moves and the support and resistance. Okay. Otherwise, I appreciate everybody for staying on the call. So we'll do this again. Like I said, tomorrow we'll kind of maybe go a little bit, probably review both the things from today and yesterday, and then open it up to maybe more questions. But we'll try to keep it a 30-minute time frame. Only reason being is if you do an hour worth of stuff, honestly, some of the things that can keep your attention. So I hope everybody got something from it, and I appreciate y'all, and I'll see y'all on the call tonight, okay?